10-year note yields rallied after a hotter than expected CPI came in. Seeing yields close yesterday at 436, rallied all the way up to 456, the highest since November 15th of last year, and the biggest single day move since February. We saw yields move up almost 20 basis points on the session. Now, not only did we get hotter than expected CPI, but later on in the day, we got a 10-year note auction, which saw very poor demand and helped keep yields elevated. Afterwards, later in the afternoon, we saw the FOMC minutes, which came from the March FOMC, so they did not see much of the data, obviously, between then and now. But clearly, the Fed was looking to possibly reduce rates in the latter part, second half of 2024. But obviously, the caveat that they have to keep inflation moving lower, and obviously that hasn't been the case. So it will be interesting to see what happens as we move forward. Those rate cut expectations have been kicked all the way out to September. What used to be a near certainty that June was going to see a rate cut is now roughly 20%, and July was also a certainty for a rate cut. Now we're looking at roughly 50-50. So really the first fully priced rate cut, you have to go all the way out to September FOMC. And again, 10-year note yields reacted by moving higher, closing at 454, up almost 20 basis points on the session. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. You will notice volatility was higher as yields were higher. That is been the relationship, but we are nearing 3-week highs after seeing a couple of moves lower earlier in the week. So yields moving higher as yields move higher. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We also get PPI, which will be interesting as we follow up today's CPI number. And then we get a 30-year auction in the afternoon, followed by a slew of Fed speakers sprinkled in throughout the session, hopefully likely to bring some balance back to this market, which is now shifting from the potential rate cuts in over the second quarter and onwards to now shifting them out to beyond third quarter. So 10-year note yields see a big move higher. In fact, the biggest single day move higher since February after a stronger than expected CPI and ahead of tomorrow's PPI, claims, 30-year auction, and a slew of Fed speakers.